and good evening, traders and aspiring traders. Welcome to another trade breakdown video. So this is the trade that I took on Wednesday. It was somehow a swing trade because it ran from Wednesday up to Thursday PM session. Thursday around PM session. It's one of the most beautiful trades that I've ever taken, or that I have taken in this year since I started actually executing using ICT concepts. So welcome to the trade breakdown, and this is how I did it. So you can remember that on Tuesday I had taken longs on US 100, that is Nasdaq, and it was a good trade also. If you haven't watched that trade breakdown, it's on the channel. You can just check it out. So, and you remember that in my weekly outlook, I had mentioned that I will be trading bullishly throughout the week, considering that we had high impact news later in the week on Thursday. That was the CPI and the other important news on Friday. So on Tuesday, after we traded bullishly, this was Tuesday, this candle that I'm marking right here, we traded bullishly on US 100. We swept these highs, but we still had this all-time high that I was still targeting as another buy side liquidity through that I wanted to see price trade into it during or throughout the week. So the fact that we swept these two and closed back inside did not give me any reason to look for a reversal. Instead, I still wanted to see a continuation until we hit this high, because as the week started, I mentioned that I want to see Nasdaq trade higher and make new highs. That was in my weekly outlook. And SP 500, I wanted to see that continuation in making a higher all-time high. So considering I'm already bullish on the weekly and on the daily, I went straight to the 1 hour charts, or 4 hour, but let us just use the 1 hour chart. And as usual, I start by marking the daily divider because it is an important time level. So that was the minute, sorry, it is right there. So if you remember well, we had caught this I had caught these longs on Tuesday. These longs right here on Tuesday, and I had swept this liquidity. So coming into Wednesday, I still want to see a continuation of that move. So as soon as I've divided my day to the midnight to midnight, if I am bullish, I want to see some form of sell side liquidity being swept before we change instead to the upside. So when I went to the 15-minute time frame, or the 30-minute time frame, but let us use the 15-minute time frame. When I went to the 15-minute time frame, what I saw was this set of lows had been swept right there, which gives us a clean sell side liquidity sweep, right? Let's make that bigger. This was the sell side liquidity that had been swept after the daily midnight open. So as soon as I mark the sell side liquidity that has been swept, what I mark next, if you have been keen on my videos, what is that? I will always mark the last set of down close candles, which is that one. I extend it to my right. So remember, all of this price action has not occurred. So all I had was this view from around maybe 7 moving backwards to the left. So now as prices has swept this and is trying to retrace upwards, what I want to see if I am to trade bullishly today on that Wednesday was that I wanted to see price close above this last set of down close candles, okay? And it did that at 7:30 a.m. New York time. So any times that I mention on this channel, there will be reference to the New York time, so you should note that. So as soon as that closed, it becomes my change in state of delivery. All right, that becomes my change in state of delivery. But then I am a time and price trader, so I looked at the time and noticed that it was at 7:30. I do not take any trades before 9:30 a.m. open. Okay, so when price did this, gave me a change in state of delivery, it could be tempting to enter, but you have to follow your rules. So what I was still waiting for was the 9:30 a.m. open, because you do not have to chase price. If price will trade bullishly, I'm sure I will get a retracement at some point and take my entries. So at 8:30, we had this bullish price action right here, which further confirmed the change in state, because as you can see, we retraced lower, then we traded against the retracement leg, so which confirms another change in state. But remember, it's still pre 9:30 open, so we do not take any action. So at 9:30, what did we have? What did we see? 9:30, we saw that this bearish displacement to the downside, which formed some form of balanced price range or some form of inverted fair value gap. But that's not important to us for this day, because remember, what I want to see is some form of bullish price action. So as this was happening, I thought that price was retracing lower to rebalance this displacement gap right here, or this breakaway gap right here. So I wanted to see price just weak, then we can get a close above this set of down close candles, right? Because now that becomes my retracement leg, okay? But then price did not give me that at that moment. So what did price do? Price continued to trade lower, and it swept this right here. So that is another sell side liquidity swept. So again, what do I do? After any form of sell side liquidity sweep, I will always mark the down close candle that has been responsible for the sweep. So on a 15-minute, we can see that we can say that it was not this candle, because this candle only wicked and came back higher. So instead of using that wick, I will use this one, these three candles, these three down close candles, this one, and this one, because they were responsible to get a close below that sell side liquidity sweep. So that is what I did. I marked this one as my LDC. Okay, let's make that bigger so that you can see it. So as soon as this occurred, you can see the times that this is occurring in. This is the PM session. It is at around 1:45. So already the AM session, no trades. I'm still tape reading, watching the markets to see if I can still get an opportunity. So I went down to the 5-minute time frame. Remember, as price keeps trading lower, all I want to see is a change in state on a lower level of price. So when I zoomed in on the 5-minute chart, I noted that price was still trading lower. So all this is it's sweeping the liquidity that it keeps generating. So it generates this low and it swept, generates this low and it swept, generates this low and it swept. So I kept moving my set of last down close candles, because each low keeps being swept. So I will keep moving it until we get a change in state to the upside. All right. So there's something that I'm looking for, but it seems that it's not visible on this chart. But I will share the screenshot later on in the video, because due to broker difference, there was a gap right here that was retested, but it's okay. I'll cover that. So you will notice that we had this last stretch of these 3 down close candles, and then price traded against them and closed above it. Okay, it actually gapped above. So what does that tell you? And check the time, it was at 3:40 New York time. If you remember what I told you in the last trade breakdown, which was the Tuesday long trade breakdown, I mentioned that if you do not get any opportunities in the AM session, you can always wait for the final hour volatility, where you can catch very good moves, clean moves, which are very volatile. So at 3:40, only 10 minutes to the final hour macro, 15:50 to 16:15 HRS, New York time. So you can see that price gapped and it closed above the last set of down close candle. Let us look at it from the 15-minute angle so that you can see it better, and then we will go back to the 5-minute, where I will show you my entries. You can see that price closed above, so that becomes a change in state of delivery, CISD. So as soon as I have a change in state of delivery, what do I want to see? I want to see price retrace lower and then break that retracement leg, and then now I can take my entries freely without any fear that we can retrace lower than that, because once we break the retracement leg, I am sure that price is ready to leave that zone and we can trade higher. So that is what price did. This right here, let me just highlight it in a triangle, in a rectangle, sorry. You see that the one that I've highlighted in the rectangle, that was the retracement leg. Okay, so I want to see now price break the retracement leg to the upside and we get a close, and that is what price did at exactly oh yeah, I'm using the 15-minute. Let's go back to the 5-minute so that we can, because you have to go lower to find better entries, so that you can also reduce your risk. Okay, so as soon as price traced lower, and then it retraced lower and then closed above this, you will notice that I had marked this as my re-entry. Okay, I had marked this as my RE on the screenshots that I shared. This was a re-entry point. So where is your first entry? If you are an aggressive trader, your first entry is right here. Okay, soon as we had that close, above the last down close candle, it becomes a change in state, and then you can take your entries there. But then if you want a more confirmed entry, you wait for this retracement, and then you wait for this close above that retracement leg, and then now you can take a safer entry. Okay, so I had one aggressive entry, and then re-entry I added a few more positions. So let's use the aggressive one, but you will notice what I have marked here. Because it was there are times where you can take an aggressive entry. For example, in the final hour volatility, we might not have enough time for retracements and all that, so it's advisable, and you just have to gauge the situation, which comes with experience. So on such hours, it was at exactly 3:50 p.m. So you can take one aggressive entry, maybe wait for the confirmation. But remember, if you're taking an aggressive entry, you do not enter with full risk size, you enter with half risk size for your first position, and then you can scale in with more size as the trade goes higher and it confirms your entry. So for example, this was a confirmation point. I actually labeled it as my confirmation. I remember the RE, it was labeled as confirmation. So because why is this moving? So let's mark it as confirmation. I want to recreate the whole setup for you so that you can see the same thing that I sent on the screenshots. Confirmation, that was the confirmation level. So you have an aggressive entry here with half your risk, you enter with 1. So why is my stop loss here? Because I believe that the daily low has already been set, and I've gotten this change in state right here. So if we are to trade higher, I do not want to see this low now being broken, because now for the first time after all this down close this downwards movement, it is the first time that we are getting a change in state to the upside. So I do not want to see price violate this low. So I believe that the daily low had been set, and now maybe we could catch something to the midnight open or higher for that day. So you will notice that in the last video I said that I usually close all my trades at around 4:15, but this was different, and it was because as soon as we gapped above this, and then price consolidated around here up to 4:15, I wasn't sure about the trade. But when I looked at my risk, the size of risk that I had in the trade, it was quite a good setup to swing trade, because sometimes I swing trade since I'm not a high frequency trader. So in such a situation, if you are not a beginner, you are allowed to hold some trades throughout, for example, for more than 12 hours or so. So for example, on this trade, I was banking on the next day, on the opening, the Asian Open volatility, which is it opens at around 6 p.m. So I was counting on that to maybe push it to my first take profits, which was around here and maybe here. So I was banking on it to do that, and I was aiming to close that trade before the CPI, but I will get into that as we move forward. So let's continue. Let's extend this because the trade went on even further, and you will notice that I was in the screenshots that I shared, I have marked re-entry points, marked as RE, which means that after every retracement and after price trades against that and closes above, that is a re-entry point. For example, when price swept these relative equal highs right here, it was a re-entry. However, the time was not right to take such an entry. But if you are to enter that right there, you need to place that stop loss maybe below this this swing low that we had used yesterday, the day before. Okay, I think so let's go to a higher time frame and see what happened when Thursday opened. So remember, I'm already in this trade at that moment in time. So when I came in the next day, I usually come into the markets at around 7 a.m. New York time. So when I came in at 7 a.m., I found all this price action had occurred, and as I have mentioned, there was a re-entry point right here. Let's mark it as RE. RE. So when I came in the morning and I saw this had already occurred, because remember, I'm coming at 7, which is around these zones. So when I saw this, it was I was even more confident to hold the trade even throughout the day, even though we were expecting CPI later in the day. I was confident that price was going to continue bullishly, because the technicals were confirming bullish order flow. All right, so you can see that after that we had another re-entry zone, which is right here. So you can see that price retraced to this order block, this set of order blocks, and then it traded higher, closed against, which becomes another change in state of delivery, which becomes a re-entry point if you missed this early entry right here. So as soon as I noted that, I extended this to maybe there. So what was going on in my head as I did this was that CPI, okay, any news, as I think I mentioned this on Monday, that any news release will either do two things. It will either manipulate or push the markets to their targets. Okay, so or it will do both. So since I was expecting CPI later in the day and my technicals were perfect, I wanted to see CPI news release push these markets to these targets that I had been targeting throughout the week. Okay, so during CPI I did not move any. I should also have mentioned that you can see that where I took the first entry, we had this inverted or balanced price range, because we had this down close, then this up close, leaving that gap open, which becomes an inverted fair value gap. And that was not the only inverted fair value gap. When you open the 30-minute candle, you will notice that we have another inverted fair value gap between this down close and this up close. That becomes a balanced price range or an inverted fair value gap. So you can see that the order flow was bullish, the technicals were absolutely bullish. So there was no reason that I was closing this trade because of the news, because news is just noise for the masses and for the retail traders, because it will either push the markets or manipulate. So remember, I had all my entries here, added a few right here, stop loss, same stop loss, but smaller lot size. So now all I was waiting for was the CPI, and everything was good. So you can see how it played out. I posted the screenshot, I shared everything, and so yeah, that is how I traded the Wednesday, Thursday, or the CPI week, or maybe the CPI price action. And yeah, I don't think there is anything that I have not mentioned. Maybe I'll just put it in the 30 minutes so that I can show you the inverted fair value gap that I was talking about. This one right here. You can see that CPI only wicked lower, swept this form of sell side liquidity, and then it traded back higher. So let's go back to the 15 minute. We took out these lows, this one and this one, then price continued to trade upwards. So if you had not entered as a swing trade, there was still opportunity for you to enter this trade at 9:30. Let me show you. This down close candle, the CPI candle, this was the news release candle. It swept this relative equal lows, or this swing low, which becomes some form of sell side liquidity, right? That is sell side liquidity. So you will wait for a change in state of delivery right here. Okay, wait for a change in state right there, which occurs at this point, and then we have this retracement leg, which you wait to be complete. So maybe let's go to the 5 minute for a better analysis. Yes, perfect. So you can see that we swept this sell side liquidity, and then we came back and traded against it. We also gapped as we did that. We had this retracement, so your first aggressive entry should be here, stop loss right here. So but we wait for that to be completed. So as soon as we had that, we had this trade above, but it not close, so that is not a confirmed change in state. We wait, and then you can have this change in state right here, because this now was traded into, which was at around 10:35, which is very good time to trade, because the 10:50 to 11:10 macro is approaching. So that could have been an entry right there, confirmed entry right there. You can place your stop loss on this low or on the CPI low. Sorry, I've used the short position. You can either use this low, this one right here, or you can use the CPI low. And then what will be your targets? Although it will be a bit thin, you could have targeted maybe 25,000, which is not a good trade. So I think I'll take that back. So if you actually missed this entry from this point, from the Wednesday, I don't think I would have taken it on Thursday, because that risk to reward ratio does not make sense. If you take it right here while targeting here and your stop loss right here, it wouldn't have made sense for me. So I would have left it, although you can see that it would have played out very well, because but that is for swing traders. So I guess that is all for the trade breakdown. Let me just end the video right there, and yeah, I'll see you next week. See you on the weekly outlook that drops on Monday evening. Yes, thank you for tuning in. Subscribe, like, share, comment, and all that. See you next time.